What's up, YouTube? It's your boy Alex Afrex. Today we have a special topic: how to trade with the banks. Trading with the banks is the most important thing as a forex trader. You should learn how to follow the banks. How do they trade? So today we are trying to demystify that topic. Okay, I hope you guys are with me. Let's go. So under that, under the category, we have other flows. As what are other flows? That is under the how to trade with banks. We have other flows. So other flows is external swings points of a market. So if you take any time frame and mark out the external structure points, if the price is making lower highs and lower lows, then the other flows is bearish, meaning that the the BFs banks like the banks and financial institutions have the intention to push the price down. In opposing scenario, if the price is making a series of higher highs and higher lows, then the other flows is bullish, meaning that the banks financial have intention to push the price up. So the purpose of order flow is to understand where price is heading overall and how to relate the current trend to that over order flow. Typically, we can see that the 15-minute external swings points are seen as internal structure on the 4-hour time frame. This is what we see to give us some us of all overflow directional bias while analyzing the markets. External structure on the chart. Okay, this is overflow. You can see from me, you can see this market is down, is a bearish trend. Okay, it's a bearish trend. Look, okay, you can see it's a bearish trend. So they said there is more focus on internal swing points. You can understand direction of price by marking up the internal swing points on the charts. Okay, if price is making a series of higher highs and higher low, then the trend is currently bullish. If the price is making a series of lower highs and lower low, then the trend is bearish. Okay, internal structures on the chart. So these external structures, that is a 4-hour time frame. So this internal structure is what the 15-minute time frame. So let's go to substructures. If the trend is about if the trend is about the internal swing point, when substructure is what we use to understand the range between those internal swing points. These are like linked lower time frame structure relative to the passive time frame. Just as the trend operates within the other flow structure operate within a trend in exact the same way. Okay, substructure of the on the chart. Look at what happened at this point. The market move up here and then you break the structure. Now it's a downward movement. So the substructure is drawing. Okay, now fractal alignments. Let's understand what it simply means. What is order flow? So this is a continuation of order flow. You should try to understand it from here. So that's okay, then now that you understand the difference between order flows and trends. Okay, so see, order flows is the overall direction and the current phase of that direction. We can place them both together. Order flows is the external direction. Trend trend is the internal direction. So the internal direction make up the external direction. So we can better understand both of these if we assign them in relationship to each other. This assignment is practical of multi-time frame analysis. Okay, multi-time frame analysis. Okay, let's go. We can better understand both of these if we assess them in relation to each other. This assignment is practical of multi-time frame analysis. Okay, another flow is if other flow is bearish, marking lower lows and lower highs, but the current trend is making higher highs and lower. This is because the other flow is pulling back. You will see the often after the we put a new low of high, then we gravitate to correct more orders. And in the process of lower time frame trend will be different to the higher time frame. This occurs as the price navigates towards our point of interest, which you will learn more from about shortly within this price of interest. We wait for trend and other flows to align before we get into the market. So currently, it really means that other flows is the external factors. So by the internal factors, I was like the trade that is the current trend. Let me say, for instance, maybe 4 hour is like it's telling you that it's going, maybe it's going south. So when you go down to 15 minute time, it will tell you that maybe it's going west. So you can see there kind of like you'll be confused because the trend was not corresponding. But in such a way, the lower time frame is trying to correct itself, so whereby it will start moving back to the normal flow, that is the other flows. So these are the structures that you can see. This is a structure that is showing is a bearish trend. So let's go break of structures. This is a very simple to understand. On any time frame, once we see a break and close of a candle above or below a swing structure point, this is called a break of structure. Very simple. We have broken old structure and created new structure. Break of structure on charts. Okay, you can see it. This is what currently it breaks. Break of structures. So you have minor break of structures. The minor break of structure is slightly different to a swing point structure. Oftentimes between those structures, we have internal swing that can be identified as external structure on a lower time frame. Okay, they are not the key structure point, but they are still some kind of internal strength within a leg of price. We call this minor structure, and it is identified as lower time frame structure relative to the time frame it is passive on. So we have major structures, minor structures, we have substructures. Please note this down, it's very important. So if you take a whole leg of price, a swing high and a low that is put in a swing low, and the high that the low puts in, and it measure from top to bottom. That is what we call a premium and discount, the top premium and bottom discount. So we use this analysis to the tools to understand the probability associated with getting into market selling as a higher probability of success when price is in premium, and buying has a higher probability of success when price is discount related to other factors too, of course. So typically we use the top and bottom 5% of the leg from our premium discount analysis. However, anything above 50 can still be considered premium, and anything below 50 can be considered discount. Okay, it's our the markets statistics. So okay, let's go to strong structures. If a high break a low, if a high break a low, this result is a lower low. Okay, and if the high cause it become more considered strong, the reason for this is because of the price is trending in direction. This means that the bank financials have an intention of price. Okay, is if that trend is bearish, they are going to be stacking, selling down. So if the high puts in a lower low, that is done with the, the bank financial selling powers. For price to take out that high ratio in its current trend, mark makes no sense because the bank financial will put their sell position on a loss. So consider that the banks control this market. That is not going to happen. That is the logic behind the practical understanding. The same is true if the scenario is inverse and the low breaks the low. and a low break the high. The low became protected, yes, and thus considered strong. That is it. So you have some weakness structures. A high fail break, a high fails break, a low or a low fails to break high. A failure to break sometimes equals to weak. So weak structure is that of both sides. If a low fails to put a high, that's low then become weak. At what point do we know what is considered weak? Price put in a lower low, forming a strong high. Once price breaks structure, it will have a trend change and price will start pulling back. Once the price enter back into the premium and then the trend change, price will align with the other flow. It is at the point we consider the swing low to be weak. Okay. So this is how we trade with the banks. So if you don't get anything, just try to understand this concept that that the higher time frame controls the lower time frame. It's very important. So as a trader, if you want to do your analysis, you should try to understand the top-down analysis. It's very, very important. Okay. Please subscribe, share, and comment on this video. Thank you.